Canada and into the United States.
So do you have a sense of how long Elon Musk's mission will last and when he will depart?
Well, Elon is fantastic, and I think he's a patriot, and I think it's a shame what they're doing with his car company. And a great car. It's a great car, great product. And it tells you what a patriot he is. He's amazing. No, I mean, as long as he'd like, I like smart people, and he's a smart person. I also like him personally. When he endorsed me, that's when I really got to know him. I knew him a little bit before that, but not much. And then he endorsed me, and it was a very strong, embracing endorsement, as we all know. And I would say Elon will stay for a certain period of time, and then he's going to want to get back to his businesses full time. But he's done a fantastic job. We found hundreds of, think of it, just hundreds of, we found millions of dollars of fraud and abuse and waste. And they're still going, I mean, they're going strong. They found something today that's horrible. It's horrible. So what they found, well, you'll find out very soon. What they found is incredible. And I give him a lot of credit. He's got some very smart people with him.
Do you think he can
And
finish?
they're working very closely with our secretaries and the people that are the heads of.
Do you
Do you think you would appoint him to another position once his 130
Well,
days?
I would. I think Elon's great, but he also has a company to run, or a number of companies to run. You know, that he can do this, that he can find the time. He loves the country. That's why he does it. But we're in no rush. But there'll be a point at which time Elon's going to have to leave.
So he doesn't have a date, a specific date.
I would think a few months.
Even when Elon leaves and goes back to being CEO, will Doge stick around in some kind of capacity?
Yeah, it'll still Doge itself. Yeah. At
What's
some
that look
point,
like?
just so you understand, I don't want to get it wrong. I want Elon to stay as long as possible. Number one, I like him. Number two, he's doing a great job. Number three, he is a patriot. That's why he's doing this. And he's, it's very costly for him. But, so I want him to stay as long as possible. But there'll be a point where he's going to have to leave. And when he does, the secretaries will take totally over. And Doge will stay active. We have a lot of smart people. A lot of those people, I believe, are going to go into the agencies. And they'll work on it from the inside.
Well, there you have it, folks. The great Elon Musk and Donald Trump really doing the dance here. Is he going to stay, or how long is he going to stay, and when he's going to leave, and all this stuff? I'll tell you what, it's hard to imagine going through this all without Elon Musk. I guess we won't be without him. Good morning, everyone. We are live. Welcome to the Impact Money Show. We're coming to you from the heart of Washington, D.C., where spring is in full swing. Whew. It's 74 degrees out there, 23 degrees Celsius for the metric minded. No rain. Actually, it's raining. I can hear it outside. And we have humidity and a breezy 94-mile-an-hour wind just rustling the city awake. It's a gorgeous day to unpack the chaos, opportunities, and game-changing changers shaping our financial future. I'm the host, Bruce Porter Jr., and we've got a monster lineup today. Markets are on edge. Policy battles heating up, global shocks, crypto grit and tech frontiers, and even a dive into living longer. So pour that coffee, settle in, and let's figure out where your money's headed on this wild world. Before we dive in, a big shout out to our crypto faithful. Bitcoin 2025 is locked in for May 27 through 28. 27 through 29, and we've snagged a sweet deal for our Impact Money Show community. Use code Impact Money, all one word, to score a 10% discount on your tickets. It's a thank you for riding with us. And don't sleep on the Bitcoin Palooza kicking off the evening on the May 27th on the first day. We're absolutely pumped about this. A night of blockchain brilliance, networking, celebrating, music, art, everything. Trust me, you want to be there, and we'll have more on this as we get closer. Now let's hit the ground running with the financial earthquake rocking the globe. Donald Trump tariff tsunami On April 2nd, the president dropped a bombshell, 10% baseline tariffs on all U.S. imports, starting today, April 4th, 2025, with reciprocal rates like 54% on China, 20% on the EU, and even 50% on some other countries, rolling out April 9th. Markets are reeling. Yesterday, the Dow plunged 1,679 points. I had it, except for COVID, it was the biggest drop I'd ever seen. 3.98%. It's the darkest day. Now, not by percentage points, but by point points. It's the darkest day since June of 2020. The S&P 500 shed 274 points. A 4.84 got punch, and the NASDAQ cratered 1,050 points, down 5.97%. Futures this morning, ugly. Let me just check here. Since I put together the show. Yep, we're still about the same. Okay. Dow, blah, 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 blah. Dow futures off 408 points, a 1% slide, and this is in the futures setting up for our opening today. The S&P down 44 points, or almost a percent, 0.81%, down 5.9%. Futures, it's pretty rough. Sorry. The NASDAQ slipping 99 points, or 0.5%. Investors are spooked by the triple threat. You got global trade war, you got stagflation fears, high inflation, low growth, and a recession that could kneecap small businesses. And I know a lot of people are saying, oh, the recession talk is all baloney and everything else. I know we'll talk more about it once Matt Dixon joins the show, but the Somme rule is also showing that we are headed into recession. Doesn't mean they can't save it, folks. They might. You know, these people, it's like I always said when I talk about the bankers and the dollar collapse and everything else. I thought the dollar was going to collapse years ago, but these people, they have a lot of tools at their shed and they don't play by the same rules as you and me, okay? The Russell 2000's already in bear territory, down 20% since November. Your safe haven is shining. Gold is 31.15, though it's off about 0.21% today after flirting with 3,200. Oil's another story, $64.70 per barrel, down almost 3.5%. Demand fears are dragging it into the abyss. This is your wallet in the crosshairs, folks, and we're here to steer you through. Congress isn't watching from the sidelines. Yesterday, the Senate pulled off a 51-48 vote to kill the new tariffs on Canada. 4 Republicans crossed the aisle, a rare bipartisan jab at Trump's playbook. Today, a gutsy Senate duo, one of those GOP rebels and senior Democrats, dropped a bill to yank Trump's tariff reins, demanding congressional approval for future levies. Over in the House, they're tackling Trump's tax bill today, extending the 2017 cuts, slashing corporate rates from 21% to 18%, and tossing in small business deductions to soften the tariff blow. Democrats are screaming deficit doom, $3 trillion over a decade, while GOP moderates from the import-heavy districts are sweating yesterday's market bloodbath. Speaker Mike Johnson is all in, pitching it as a middle-class lifeline against the decades of trade sellouts. Everywhere, elsewhere, a $120 billion disaster relief package is clawing forward, stalled since March storm hit the Southeast, now juiced by Trump's America First nudge. It's got a farmer aid for tariff retaliation, like soybean growers facing China's wrath, and a Senate committee greenlighted it yesterday, though Rand Paul's griping about the costs. Next week, the House Oversight Committee grilling Fed Chair Jerome Powell. Why no faster cuts as stocks tank and gold soars? Money's a chessboard and DC's moving the pieces. Zoom out globally and it's pandemonium. Canada is hitting back with 25% tariffs on U.S. vehicles outside the USMCA, $30 billion on imports like steel and aluminum too. Effective now. China's been at it since February, slapping 10 to 15% on U.S. chicken, wheat, and cotton after Trump's 54% reciprocal rate. They're promising more pain soon. The EU's got a 2-step dance. March 12th duties on U.S. bourbon and motorcycles escalating to steel and aluminum mid-April. Then a wider net talks flop. Then a wider net if talks flop. Vietnam's playing nice, cutting tariffs on U.S. LNG from 5% to 2%, cars from 45 to 65% to 32%, and ethanol from 10% to 5% since March 26. That's what they've done so far. Starlink's greenlit here too. India's teasing similar cuts on U.S. cars and gas to sidestep Trump's hit list. Mexico's holding fire, but prepping a comprehensive retaliatory trade. Beyond all this, Miramar is mourning 3,000 dead, 3,145 dead from the last week's 7.7 magnitude quake near Mandalay. Hospitals crumbling as monsoon looms. South Korea's constitutional court ousted President Yoon Suk Yeol today after last year's martial law stunt. Snapped elections in the constitutional court ousted President Yoon Suk. Snapped elections in 60 days, they say. U.S. weather is brutal. Tornadoes since Wednesday killed one in Missouri, wrecked a warehouse in Kentucky and Indiana, and Nashville's bracing for generational flooding after 2 to 4 inches of rain overnight. Hungary's bolting the ICC over Russia ties, and they have Filikowski, or whatever his real name is, Netanyahu, coming to visit, so they're falling in line there. And Trump's representatives met Russian negotiators here in D.C. Trade chaos meets backroom deals. It's happening right now. Your investment feels these tremors, and we're mapping out the fallout. Trump's the headlines machine. I told you guys. He wakes up, and if he's not the head of the front line, he gets on there on his Truth Social and just starts posting. That's honestly what I believe. This guy, what is he called? He's a headline machine. I think that's what he calls himself, as a matter of fact. He's a headlines machine. A ratings machine, right? Last night on Fox, he dubbed the tariffs Liberation Day, projecting $600 billion a year. Economists counter with recession, red flags, and consumer price spikes. Yesterday, he cleaned house with the NSC. Vets Brian Walsh, Thomas Brody, and David Feith got the axe after Laura Loomer had an Oval Office sit-down. She's pushing loyalty test, though Trump's brushing it off. NSA Chief General Timothy Howe is out too. Loomer says disloyalty. No official word yet. Elon Musk's Doge exit rumors. Well, Trump says May 2025. But Musk's fake news tweet and leave its garbage slap down, muddy it. They're all over the place, really. You saw at the beginning of the show Trump talking about it. They're kind of back and forth on everything. It's hard to follow. Tesla is up 6% anyway. Approval is at 43% per today's Reuters. 19 Democratic attorney generals sued yesterday over this March 25 election order, proof of citizenship and voting. I mean, imagine, right? You have to have proof of citizenship to vote. Who would have thought? No late mail-ins and funding threats, calling it an unconstitutional grab under the election clause. Trump's team says it's fraud-proofing, and critics see theater when 11 million undocumented, 11 million. They've been saying it was 11 million illegal aliens that were here since I was like 20 years old, folks. It's got to be like 50 million or something here. But these are the real issue. That's the point. I think that this whole voter ID thing is just a Band-Aid on the real issue, is that we have tens of millions of illegal people here, and they're having kids and everything else, and it's completely changing everything. Deportations topped 432 in 2013 under Obama. Trust me, we're nowhere near that number. Nowhere near that number. Largest deportation force in the history of the United States has fizzled out into nothing. I know we're in the first few days. Let's see what happens. Crypto is our pulse, and your top 100 list shows spine. Yesterday, the stocks bled, but Bitcoin did climb about 1% to 84,496. Of course, it's pulling back now. 82,950 or so. It's dropping. Ethereum, also, and all the alts always follow, right? Solana, Avalanche, all of them. We'll talk more about that. At 8:30 this morning, job data has come out. We're expecting 4.1% unemployment, 150,000 payrolls expected. It could jolt it. A miss below 100,000 lifts Bitcoin to 85,000 as the dollar hedge. If it comes above 170,000, that drags it with the stocks to 82. Altcoins like Sui are looking really good. Pepe, too, they have juice. We'll see how it all plays out. Make sure to grab your Impact Money discount at the Bitcoin 2025 and join us for Bitcoin Palooza. Impact Money for your 10% discount. Currencies are dancing too. The yen is up at 146.43, and that is after. Let me just see, because markets are just popping around here. Let me see if that's still the case here. I don't have that tab up here. Let me see. No, it has slid. It has obviously as well strengthened again. So the yen is now 145.54. So even in the last hour or two, I put the show together. I mean, this market's just popping. It's popping around everywhere, guys. It is moving, and it is moving fast. Very normal before. Well, first of all, we have everything that Trump is doing with the tariffs, and then we have jobs numbers and everything coming out today. Uncertainty makes things volatile. The markets do not like uncertainty. Okay, the stocks, the Hang Seng, is down about 1.5%. China's 70 billion stimulus might hold it, but a 34% U.S. tariff on mainland exports threatens Tencent and Alibaba. Futures say more pain. S&P's 500 is about at support, and we'll see how that all plays out today. Commodities are screaming. Silver is at 31.41, off about 1.77%. Industrial hits from tariffs like solars and electric vehicles clash with safe haven bids. $30.50 next if the jobs shine, 32 if they tank. Oil is at 64.70, as I mentioned a little bit earlier. We'll have to see how this all plays out. It is pretty interesting. Gaza's a heartbreak. Yesterday, Israel bombed the Dar al-Aqam school, which is now a shelter in Gaza City. 29 dead. Over half of them are kids. It's really hard to watch. Half are kids, women, and elderly. You saw bodies, if you watched it, blasting towards the sky upward. I can't unsee that. Since March, 400 are dead. Over 400 are dead. It's just absolutely, I don't understand how in the world everybody can be okay with just blowing all these kids up. I don't understand it at all. I talk about it on the show every day. I don't understand it. My dad was in Vietnam, and he said, they did all kinds of stuff in order to get the women and kids out of there before they went in and shot them up and everything else. And they went to great lengths. And I think you have a moral responsibility to do that. I don't think that it's okay to just drop bombs on a place where full families are, and 10-year-old kids and little babies and 4-year-olds are. That's not okay. That's not okay in my book. Not okay in my book, folks. Ukraine war rages last night. Russia drones hit Kharkiv. Few dead, 25 hurt. Hospital strike. Ukraine calls a war crime. Russia's drafting 160,000 more men, leading on 3,000 North Korean troops in Kursk and grabbing Donetsk village. Ukraine's hitting Belgrade. Dnipro's morning 4. Zelensky wants Western muscle. Trump's ceasefire push stalls. Putin's UN-run Ukraine ideas a dodge per Kiev. U.S. aid's wobbly after Zelensky spat. Sanctions loom if Russia digs in. Money's in energy and defense here. Watch oil and Lockheed Martin. Musk is a roller coaster. Dodge exit, of course, coming up. We'll see how that goes. He is under fire with everything. The federal judge nixed his Twitter lawsuit defense on April 2nd, and Doge's Social Security grab got blocked. His $25 million Wisconsin play, of course, didn't play out as well. AI is electric. NVIDIA is riding Musk's buzz. Google, Gemini Robotics, bends in arms like butter. And OpenAI's paper bench apes ICML Research. China's DeepSeek V3 version 3 and Malaysia's Imagine Life are 68% faster, 70% better outcomes. They push AI to the edge. Tariffs, juice, logistics. Really is everything is just happened here. It's happening. Robotics, agility, $400 million digit haul this week. Screams automation. Tariff-proof warehouse. Tesla's Optimus wowed Capitol Hill, and a UK surgical bot nabbed 200 million. Life's longevity hopes Maria Bensaya Moria, 117-year gut study, ties youth like microbes to lifespan. New limits mouse cell reboot, and Harvard's plant-based diet push promise health span. Skip sugar, as the experts say. That's your opener, folks. I have with me the great Matt Dixon. Let's pull up the markets here and see what's going on with your money. Sir Matt, how are you?
Hey, good morning, Bruce. I'm good, thank you. I have to agree, you're absolutely right about the terrible atrocities, the war, the suffering, the violence. It's absolutely horrendous. And
it's just so hard to watch, man. I don't watch it much, and I just saw a video of this, and it's like, yeah,
everywhere.
Everywhere. Yeah.
Anyway, we'll all agree on that. So I'm just sharing my screen, Bruce. We'll take a look first of all at the SPX, because it's obviously the S&P 500. We had some expectations. Can you see that chart, Bruce?
Yes, I got it up. Sorry about that. Yep.
Yeah, great. So basically, I've been expecting an ABC to the downside, and that's basically what's happened. This is the all-time high here. We had the A wave down, we had the very corrective B wave higher, and I think we're getting a 5-wave move down in C. The C wave needs to be in 5 waves. So we've had already wave 1 down, which itself, when you looked especially on a shorter time frame, you could see it was actually made up of 5 waves itself. And then we've had an ABC higher for wave 2, and then moving down, and we've always say that the wave 3 is normally the aggressive rapid movement, normally a lot bigger in magnitude, normally at least 1.618 times wave 1. So I measured the wave 1 here, and I just transpose it to top of wave 2 to look where wave 3 should go to. And we've already touched it, basically, or just about touched. I'd have to check. It's, if I put that on precisely on the top, we've basically touched 1.618. That's not to say it's over the move down, but potentially that's the end of wave 3. And it was quite an aggressive move down yesterday, as you say, 4% on most of the indices on the downside. So that's potentially wave 3. It could obviously go further, but potentially that's wave 3. A wave 4 would tend to be sort of sideways choppy action, but we still have a wave 5 to the downside still to come. So the pain is not yet over, it would seem, for the indices. Just interesting to see. I'll just look on this CME FedWatch tool now. We've followed this. So 2 days ago, there's an 85% chance that rates were going to stay on hold at the next meeting on the 7th of May. So 1 day ago, it went down to around 75-ish%. And then today it dropped to 63%. So it's just eroding so quickly, the expectation of a hold now on rates. And it's shifting over rapidly towards a potential cut in rates, 25 basis point cut in rates. So it's rapidly moving. Let's just see if it continues that way. But if it does continue that way, before long, it's going to be the majority odds decision that we're going to have a cut in rates. Now that might give some respite to these negative markets at the moment. We don't know quite what is going to stop it right now, because we had a bit of respite overnight, but then they seem to be falling again now. So if I just jump back to the SPX here, we can see we're probably, to be honest, 1.618 is the smallest extension you would expect for wave 3. I suspect we're going to go further. And if I just show you how I would, I'll remove that one and show you what I expect for a minimum expectation for the C wave. So I've measured this A wave. So 0 here, 100%, that's the extent of the A wave. And I just transpose that same Fibonacci measurement over to the top of the B wave. And so a minimum expectation would be 5.1, 5148. We're not that far off that now. We're 5279 right now on the S&P 500. That is a minimum expectation, and it may well be that we extend even, a C wave can easily be 1.618 times the A wave. That would take us to 47. So there is a lot of potential for downside. But if we get to the 100% here at the 5-1, again, I'm always telling you my favored strategy is dollar cost averaging and buying the dips. So I'd probably buy a little bit of the dip there, not too heavily, but just as a potential turning point, I'd buy a little bit of the dip. And if it drops further towards the 1618, I'd probably buy again to average my position. So all in all, expecting more downside there really on the S&P 500. And the other assets, crypto assets in particular, Bitcoin, are highly correlated with the SPX, the S&P. Not quite sure where to go. I've got some detail to look at today on gold, but I think we'll just go into Bitcoin for now and just see. We had this correction higher from the low we had a week or so ago, a couple of weeks maybe, 76,000. We moved up in 7 waves, which is corrective. We now moved down wave 1. We've had a wave 2 higher, and then we're moving down now. So it looks like with Bitcoin, we probably have quite a bit lower to go, because if that's wave 1, wave 2, we potentially have a long way lower to go with wave 3. So I'll just do the same trick as I did previously with the Fibonacci measuring tool. So I'll just measure the magnitude of the wave 1, which started there. Then I'll transpose that to wave 2. Now wave 2 is almost the starting point. It's just below, so it's a valid Elliott wave count. It has to be below the start of wave 1, and it is by just a small amount. So we've already moved to 100%, and that's actually quite a good support level. But I think the bounce from it is going to be temporary. I think we're going to descend below that level again very soon. And the expectation for wave 3 will be at least 1.618 times wave 1. So 1.618 would take us to this level here, 76,443. That would be the wave 3, and then we probably get a wave 4, slightly choppy sideways, slightly higher, wave 4, and then again lower to wave 5. But do remember, the line in the sand is 69,000. I don't believe, and I really hope we don't break that 69,000. Looking reasonably hopeful at the moment that we've had basically wave 1, 2, 3, as I say, could take us to the 76,000. Small push higher for wave 4, then a final push down in the 5th wave, wave 5. And that could and should hopefully complete the correction overall for Bitcoin. And it might coincide with the potential lower interest rates coming, or at least being signaled on the May the 7th Fed meeting, FOMC meeting for interest rates. If that happens and we start to see easier monetary policy, that could give the fuel to push the S&P, Bitcoin, crypto, all sorts of risk assets much, much higher. And my prime expectation, my favorite outcome is still that this is just an overall correction to the downside, and we're going to push to new all-time highs for Bitcoin. Of course, the previous all-time high was about 109,000. I think we should push well above that. I'm not sure how far above. We need to watch once it starts and we see a wave 1, wave 2. In the same way as we calculate downside, if you see a wave 1 and a wave 2, you then look for at least 1.618 for the wave 3. So once we see that wave 1 and 2, we can start to make estimates and calculations as to how high we might go with the Bitcoin ATH, or Bitcoin all-time high, that's expected to come in the not too distant future. So I'll just scroll through them in order. I mean, we've also had quite a big correction on the Ethereum, and again, entirely expected, but also like Bitcoin and like the S&P, we still expect more downside to come. It won't necessarily go to this level. This is just a directional indication of what direction I expect it to go. So I do expect more downside for Ethereum as well. And it's, a lot of people are in pain with Ethereum because it had that rally up to towards 4,000, and it's come back down now 1,700 and something. So it's come down a long way, but I think it has a long way further to go. Still some way further to go, should I say. We had this corrective, almost sideways, but slightly upward basically a bear flag situation here, and we've had the beginnings of a move down, but this needs to be further movement down, because this movement up here, like Bitcoin I just showed you, was in 7 waves. Ethereum also, this movement up was in 7 waves. And remember, 7 is a corrective number. It means that the next movement is downward. The impulsive direction is still to the downside, and it should take us below the beginning of this at least. So we still have some way down to go. So I'm not buying yet. You know, I'm always looking to where to buy and to dollar cost average. But now I don't believe is the time. I still think we have lower to go. So there's a lot more.
Yeah, I actually opened a short as I woke up this morning, and then I closed it as we started talking together.
Yeah. I mean, actually, I'm not shorting the market, although actually it's probably the sensible thing to do right now, because I'm pretty confident there is more downside to come. But I'm actually just focused on building positions for the future, hopefully for this rally to all-time highs coming. So yes, you can make some short-term money shorting the market, and I think you probably will make money if you short the market. But as I say, I'm personally not shorting at the moment. It is a high-risk strategy. We've moved down a long way, remember, already from 109,000 to currently 80 or 83,000 right now. So what's that, 26,000 down from 109. We're 25% off, really, somewhere around that on Bitcoin's already fallen 25%-ish. And yes, I do expect it to go further, but we may be getting, hopefully, approaching the end of the move down. I still think there's probably quite a way to go, but we're getting towards the end of the move, hopefully. And so I'm not looking to short. I'm waiting and looking to position long in the market and just waiting for those opportunities. No point really looking at Litecoin, not even Solana today. I mean, I love Solana. In fact, I'll jump straight across because you said the alts are suffering. Well, there's a couple of alts. Well, actually, one. Let's just look at One Harmony because it's interesting yesterday.
Again?
I said,
yeah, go ahead.
Yeah, again, but it fell yesterday. As I said, it fell, but it fell by the exact amount of the previous candle. So what I've been saying is these candles, to me, it looks fake. It's not organic. Organic is random buying and selling. This is not random. Every one of these candles almost is identical. So this is basically scheduled, automated buying and selling, just effectively following the market. It's a zombie token for the time being. I hope they manage to solve the problems they had and resurrect it and move forward. But at the moment, it's still a zombie token. So every one of these 4-hour candles is virtually identical, telling me it's just a program that's running the buying and selling. There's virtually nothing organic going on there. So we moved down yesterday as I expected. Then we moved up again by the same amount. Then we moved down again, gap down actually by the same amount. Now moving up again. It doesn't look promising. So it's not one. I mean, yes, it's going to go up and down with the market. So you can trade it. I don't know how much real liquidity is there. So it's not one I would trade because you need a token with liquidity to be sure you can get in and out when you want to without too much slippage. And slippage is basically what happens when there's not a lot of liquidity. You try to put a big buy or sell order in, and the price actually moves a lot to fill that order. In other words, the other buyers and sellers in the market, there aren't enough of them. So the price has to move a long way to fill your order. And that's why when there's not liquidity, it means you get a lot of slippage. You don't get the price you really want, and it becomes a very expensive way of trading. But right now, at this moment, it's actually up 8%, which is looking good. I think there's only one, well, actually, there's only one near it, and that's Fartcoin that we looked at, interestingly. But I was looking at this morning. It's quite interesting. We had, I look at these divergences. I'll just bring it all into the frame so you can see where we're looking at. So clearly, we had a hidden bearish divergence here, which told us to sell here, and it went down. And though it doesn't look much here, in percentage terms, it was a lot. I mean, it fell, from well over 60 to 30ish, so it fell 50% just from there to there. So this signal was pretty good, giving you 50% if you had shorted it. But right now, this morning, we had a regular bullish divergence signal here. That's where we had lower lows on price, corresponding higher lows on RSI. That was telling you price was about to bounce, and look at it, right on the button, it bounced. And it bounced quite nicely. It was actually up 17% when I looked this morning. It slipped back a bit now to 7%, but it went from 35 cents to a high this morning of 48 cents. So, that's a big percentage that you could have made just based off this little signal.
Huge.
So,
Yeah.
yeah, it is huge. I mean, you think in stocks and things, you can wait a long, long time to make those sort of gains. So we'll just look now at some of the traditional things that we look at. I mean, we'll look at oil. Oil is falling. I mean, since you mentioned $64 a minute ago. You're out of date now, Bruce. It's just in the last few weeks it's dropped to $62. So it's down 6%, which is phenomenal for a daily drop in oil.
Unbelievable.
Yeah, and we've sunk through that support. I did say yesterday, by the way, I expected it to break support, and it has done. And it's even broken this long-term diagonal support on prices. It's broken that. It's heading to the downside. This is just showing you that the world is not taking these tariffs very, very well. It is going to slow the economy. It puts the prices of everything up. And so it is going to limit consumption. Definitely, people are going to have to draw their horns in. They're going to have to spend less, and it is going to slow the economy.
Well, the thing is, it's basically, at least at first, it's another tax.
Yeah.
On common people, on the middle class, on everybody, but they're the ones who are going to feel it, the middle and lower class.
Yeah, definitely. Yeah, it's going to be painful, and even if America were to get more business back, more businesses to relocate back to America and do all their manufacturing in America, etc., it would cause if that were to happen, maybe America's better off, but the rest of the world would suffer. And actually, no country, even America, is not an island. And if the whole world suffers apart from America, America will suffer. So, it's all interlinked. We live in a completely global economy now, completely interlinked. And this is not going to end well, I don't believe, unless he reverses his decision on these tariffs. Is not going to end well. And I know he's threatening, maybe he'll pull back if other countries then, I know Israel, for example, removed all their tariffs on America. So maybe it'll it'll cause other people to open up and reduce their tariffs, because tariffs are not a good way to promote trade, that's for sure.
I think the thing is that, we just allowed the trade imbalance for so many years. I mean, he really does have a point there. It was with countries charging us 60-something% tariffs, and then we're not, we just let it happen. So in that respect, I totally understand it. But,
if other countries are levying heavy tariffs, then yeah, I do understand that it's not good. But America's productivity is, that's the problem really. It's productivity. They're not as productive as other countries, and that's obviously because the labor costs in other countries like China are so much cheaper. So how can America compete on a level playing field when their wages are so much lower? So the cost of producing something in China is generally a fraction. So the only way America can win in this war really is to increase productivity, and they do that by leveraging their technology. So America, is a very advanced nation. They are very advanced technologically, and so that will be the way to tackle this. I don't believe imposing tariffs is an effective way to do it. It's just going to slow the world economy, and everybody's in a mess. You're going to drag everybody down and yourself. It's like cutting off your nose to spite your face. I think that America should focus on the things they're good at, which is innovation. They should focus on AI and technology and all these things, and work their way out through excellence and through being the best, not through just levying tariffs, which are going to just hurt everybody, I think. But that's my opinion.
I hear you. I think, like I said, if as much as I totally agree with you. If you look at the list, it's like we were getting charged all of these tariffs. So I don't like it either. Everything's going to get, the markets are crashing. Everything looks like it's going to get more expensive, everything else. But it's like my mother-in-law complaining about, Trump or whatever. Well, the reason we have Trump is because the last guy did such a bad job, I don't know. Anyway, we are on the same page. It's just it's crazy when you look at how much other countries were putting tariffs on our goods. It's crazy. That's why we couldn't export anything or manufacture anything.
I mean, I did look at the list today, and if those figures are correct, yeah, you're right. There's a lot of countries imposing some heavy tariffs, which is not a good way to do business, I don't believe.
Yep.
So yeah, it's tit for tat, I guess. But sometimes, it doesn't end well when both people just are punching the lights out of each other.
That's true. For somebody that is supposed to be the negotiating king, I would like a little bit more negotiating.
So this is the long-term picture on oil. I still think that we're going to take off at some point to the upside, because there's a number of ways you could look at this, but at some point I do think oil is going to take off, and I think it's going to be based on geopolitical tension. So the other thing is that these it doesn't create a friendly atmosphere when you got all this trade war going on and tariffs and so on. And it's, at this time, we need to be looking at ways to make peace. And this is what we're saying is you want there to be peace. I mean, we see the violence, but it's not just violence, physical violence, but it's even this tariffs. It's violence, basically imposing tariffs on each other, and it's not the best way forward. We need to look at, as you say, negotiation and agreement. And I think hopefully that's what will come through eventually with the conflicts around the world, but also the economic conflicts which are flaring at the moment. So anyway, I wanted to just touch before we finish. I don't know how much time I've got, but we talked about gold a little bit. And I've scrolled right out here on gold. Let me just scroll out even further. So going back to the low price back in 2015, so 10 years ago now, on gold, and we started this recent impulsive rally to the upside, which is a 5-wave move with these numbers you can see here: wave 1 in blue, 2 in blue, 3 up to here in blue, 4, then wave 5. And quite typically, as I said, wave 5 tends to be the extended wave, and that's exactly what's happening here. It's absolutely what I said it was, and it's all based on liquidity. Basically, when there was zero interest rates, we went to zero interest rates and the price pumped. But basically, once rates started to, you can see they had a long period of this zero interest rate policy. But when they exited zero interest rates, in other words, draining liquidity from the market, that's when the gold price fell. So then we had the interest rates near the peak, and then the interest rates start to fall, and that's when we start to see the rise in gold price as interest rates were falling and pumping the price higher. And Bruce said that they have been, I haven't seen this, I need to check it really, but I do trust you, Bruce. You said they're printing money. So
yeah,
that has been pushing the price of oil. But what I wanted to show was on the big scale, and I mentioned this briefly yesterday, we've got a 1, 2, 3, 4, and 5 on the big scale. That's a 10-year scale, looking back 10 years. But then I want to look at the 5th wave here in blue, which is made up itself in red of 1, 2, 3, 4, 5. So you can't quite see it. I probably need to open it out a bit. But that's the 5th wave itself is made up of 5 waves. But then we've got the 3rd wave here is also made up of 5 waves. So you can see that 1, 2, 3, 4, 5. So I'm just wanting to show all the fractals. But then the final 5th wave here that we've got, I'll open this out on a shorter time frame, probably the daily. So that final wave up itself is broken into 5 waves. So we can see that 1, 2, 3, 4, 5. And then even the 5th wave of the 5th wave here, we can see even that is broken into 5 clear waves. 1, 2, 3, I'll just put up there, 3, 4, and 5. And we may have stopped out. So that would then be the 5th wave of the 5th wave of the 5th wave of a larger 3rd wave. So still, we probably have a wave 4 down to come, which could come quite some way down, then a further 5th wave to go. So I still think gold will have new all-time highs to come, but I think we're overdue a pullback, and I think this little 5th wave here shows it. We've completed this little 5th wave. So like we had a pullback here on that 5th wave, which was, well, 3rd wave there, we had a pullback. This 3rd wave, we had a pullback. This 3rd wave, we had a pullback. We also get a pullback after every 5th wave. So that's the pullback coming here. I think there's probably a bit more to go. So I think we're still in for some pain for a lot of assets, and that actually will include gold most likely. And what's telling us the story is, as you said, dollar yen, you rightly said, is a proxy for risk. It's the carry trade, and people borrow from yen at really low interest rates, and they invest in risk assets. But when risk assets start going down, as they have been going down, then they have to basically cash in the risk assets. That causes those assets like Bitcoin, S&P, etc., to go down, and they have to pay the money back from where they borrowed it from, the yen. So when you pay it back to the yen obviously appreciates because you're paying money back into the yen, investing money in the yen. So the yen appreciates. So that means the dollar yen here
continue to climb, continue to strengthen even as the show goes on.
Yeah, absolutely. And it looks as though we have some kind of possibly have some kind of ABC move in the making. And if that's the case, based on our Fibonacci little tool that we showed you a minute ago, if this is a wave A down, this is just assuming it's a wave A and assuming it's not impulsive to the downside. But even if it's just a correction, then we've already gone to the 0.618, which is actually an interesting level. But we would likely go to at least 100% extension of the A wave here. That would take us to 136. So still potentially a long way to go. Now, if dollar yen comes down to 136, you can be sure that risk assets are going to be selling off because this is a proxy for risk. So if this goes down, we can see there's a lot more downside to come with the risk assets. So as I say, I'm still, there's probably still room, as Bruce is doing, to do the cheeky occasional sell the market, sell short.
I should have kept it open, but I had already done. I had, I leveraged. I was already.
You haven't listened to my show, Bruce.
Huh? Yeah. What's that?
Yeah, there's still some more downside to go, but as I say, I'm not looking to short the market. I'm just looking to wait for the opportunity to buy the market. All of the tokens, I think, are gradually heading downwards, apart from, funnily enough, one Harmony, and that's just, as I say, there's no genuine trade on there. I think it's just all automated, inorganic trade there. So all in all, I think there's lower to go. I think we're going to have a difficult weekend ahead of us. But it's just possible. Sometimes when there's low liquidity over weekend, we sometimes get the markets drifting higher again.
Yeah.
But if we do see them drifting higher, it will be another opportunity to basically head lower again next week. I think there's still some way to go. These tariffs are yet to be digested. And actually, a lot of countries still haven't decided on their response. So just, for example, the UK, I've said they're reviewing all sorts of potential tariff responses, but they're not going to actually implement those responses for another, well, by May the 1st, they've said. So they've still got 3 weeks or so, 3 or 4 weeks before they implement their response. So there's still probably a lot to play out here with these tariffs. As you say, maybe long term, they might have the effect of bringing the world into more equality. Who knows? But don't forget, America is already the powerhouse of the world economically, and all they're wanting to do is create greater dominance. And surely the other countries are not going to be too happy with America creating even more dominance than they currently have. So this is why people are not happy.
A lot of people aren't happy. I'll tell you that. In DC, man, people are not happy. Both sides of the aisle. I don't know. Nobody's happy. And the traffic's unbelievable.
You got the bully in the schoolyard, basically wanting to punch more boys in the schoolyard to get greater dominance. That's what's happening.
And like I said, and the traffic is just like, I guess because of the back to work order or whatever else, and then the shenanigans that we have going on in the House and the Senate. I mean, I don't know, but we have gridlock. It hasn't been like this since before COVID.
Yeah, I saw some of that in the news. Yeah. So anyway, I think we are really actually at the weekend this week. I know I took a long break last weekend, didn't I?
Well, in Dubai, it's a little different, right? I mean, the weekend, even though they changed it a little bit, the weekend still kind of starts on.
Yeah, it does kind of start Friday. Things certainly start to run down Friday. People go home early, etc. They often finish lunchtime. So
I am coming. I'm coming. So I'll be there for the Global Family Office Investment Summit. So I'm coming probably around the 4th or so. Man.
Oh, unfortunately, I'm not going to be here. I'll be back in the UK at that time.
Unbelievable, really?
I'm going to miss you, yeah. But I've got to go. Important.
Be like
family.
ships in the night.
Yeah. But we'll catch up soon. All right.
Okay.
Thank you, Bruce. Thank you, everybody, for listening. Hope it helps. So just to sort of finalize, still more downside to come. So be very, very careful if you're dipping your toes in this market. So again, thanks for listening, and bye for now. Have a great weekend.
You too, Matt. Thank you.
Cheers. Bye-bye.
The great Matt Dixon. This world-class, as I always say every day, world-class analysis that we give here on the Impact Money Show. We look at it all, folks. Crypto, precious metals, oil, stocks, currencies. If someone's trading it, we look at it. And actually, one of the ways that we're able to predict the markets the way that we do, of course, technical analysis and Elliott wave and the Fibonacci and everything else, but it is also by looking at all of the different markets. Because when you see oil take a 6% dive, well, wow, that's huge. What does that mean for the rest of the markets? Oh, well, let's take a look at that. Frozen. I'm frozen. I froze. Okay. All right. I guess I'm frozen. Hello. We're frozen. All right. Hello. Hello.